Welcome to our weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. The way this call works is this is an AMA, like on Reddit, meaning ask me anything. You can ask me business questions, career questions, finance questions, any questions you want. And my goal is to humbly help you take your career, your company, your portfolio, etc., to the next level. So without further ado, let's begin, and thank you. We need to stop self-sabotage today. The only reason we're not more successful is because of a lack of confidence, and we are always our own worst enemy. So I'm going to show you a quick tip on how to become much more confident, and this will be fun. All right, so this is my favorite chart in the world. I created this a couple of years ago. So on this chart here, we have your age, and this is give a darn. So when you're younger, down here, you don't care what people think of you. You know, you have meltdowns in restaurants. You just don't care. And when you're older, you also don't care what people think of you. You know, older people usually don't have confidence issues. The problem is when you're younger, in your 20s, 30s, and sometimes even 40s, you live up here. You care what people think of you. And this here is called the triangle of despair. And I want you to avoid this triangle of despair at all costs. And I want you to start living at this level right here. The best entrepreneurs in the world live at this level. They don't care what people think. You know, Oprah Winfrey was told over and over and over again that she wouldn't be successful as a broadcaster. She didn't care. She kept trying. The same thing with all successful entrepreneurs. Many of them got fired even from the companies they worked at. They just didn't care. And so for the rest of your life, I want you to live at this level here. I don't want you to focus on what other people think of you. And the second you do that, you will unlock this unbelievable euphoric feeling that you've never felt before in your life. So always live at this level here. So how do you live at that level? Well, what you can do is you can tell yourself, I don't care what people think of me. It's very therapeutic. It's cathartic. Try it. And so your homework is this. I want you to get a piece of paper and a pen. And by the way, if you meet me in real life, I'm a really small man. Yeah, I'm tiny. I want you to get a piece of paper and I want you to write this down, okay? I don't care what people think of X. Do that 10 times. I don't care what people think of the way I look. I don't care what people think of my career choice. I don't care that people find out that Chris Haroun still plays video games at 51. I love it. You got to live your life on your own terms and not give a damn what anybody thinks. And if you do that, then you can fail a lot and then become successful. So Michael Jordan once said, I failed over and over again in my life, and that's why I succeed. You only have to be right in business one time. And there's a great quote I've got on the wall back behind me there from Teddy Roosevelt, former president of the United States. He said, believe you can, and you're halfway there. Confidence is king. And your life can be ruined if you care what people think about you. So starting today and going forward, I don't want you to care what anybody thinks of you. And the most successful entrepreneurs, they failed many times, more times than all of us have combined. But as Mark Cuban said, you only have to be right in business one time. So don't care what people think of you. And this way you can live your life on your own terms. Now, please keep typing your questions. I want to show you a quick video that I created for you that shows you how, if you're more confident in life, you can achieve anything, including getting more customers, getting a date, etc. Again, you only have to be right in business one time. You are your own worst enemy. If you think that he or she is out of your league, you're so money, you don't even know. So there's this concept I came up with called the networking match equation strategy, or NME. It applies to dating and to networking. And I explain this in more detail. Okay, why my enemy strategy, your own worst enemy, will change your life. But let me give you an example first in dating, okay? And then we will apply it to networking for a job or networking for a customer or networking for any reason, really. Have you ever seen somebody else dating somebody and the person they're dating is way better looking than they are? Of course you have. And you wonder to yourself, how did this person get that other person to go out with them? How did this guy get that perfect woman to go out with them, or vice versa? She is so gorgeous, smart, outgoing, and personable. But he is not a good-looking guy and not the smartest guy. How the heck did this guy get in a relationship that doesn't match his looks or intelligence? Now let's bring this equation into balance, okay? The enemy equation. Stick with me here. So he believes in his heart that he's a 10, and she'll believe the same thing. So he's a 1 out of 10, okay? We need 9 things to get him up to a 10 out of 10, okay, to make this equation balanced. This has a lot to do with networking as well, okay? So he's a 1 out of 10. He thinks he is at first. But he's outgoing. Okay, that's another point. Okay, good. So now he's 2 out of 10. He's personable. That's another one. Now he's 3 out of 10. Okay, he deals well with rejection or failure. We're at 4 now. He's a risk taker. That's a 5. He thinks long-term, knowing that the pain of not spending the rest of his life with her is way higher than the pain of him getting rejected by her. Okay, now we're at a 6. He asks. That's a big one. He asks. You never get what you want in life. You'll never get a raise, promotion, a date, or anything without asking. Okay, we're at 7. He thinks more with his heart and less with his head. He's passionate. We're at 8 now. He is incredibly unique, interesting, and impressive in his own ways. We're at 10. The equation is now in balance. Wait a minute. He has more positive qualities. But why do we care? I mean, the equation is in balance. He's a 10, she's a 10. Well, that's the problem. We need 5 more, so she thinks that he is way out of her league. Oh yeah, we forgot that he is passionate about everything in life, including his job, because he doesn't have a job, he has a passion. He's now a 15. He's passionate about everything in his life, and she's a 10. So in his mind, he is 50% out of her league. That gives him the confidence to ask her out on a date. You are your own worst enemy. If you think that he or she is out of your league, not only are you on par with them, you're up here, you're out of their league. The same thing with networking. You can ask anybody you want, not only out on a date, but also for a networking meeting. Why is analyzing love and dating relevant? Well, networking and dating is identical. So if you've ever asked somebody out on a date, you're kind of networking. All right, let me get to your question. So this is officially our 5th year anniversary of doing this weekly call. I started back in 2018. I'm going to be doing this weekly call every week forever. Okay. Please keep typing your questions. Okay, so, and by the way, when you start your social media strategy, I don't want you to give up after a couple of months. It might feel like you're screaming into the wind. I want you to be consistent and stick with it forever. Okay, most people give up on social media after a month or 2. But as Warren Buffett said, the longer the view, the wiser the intention. Okay. All right, let me kick it off with Andre. Andre wrote, do you have any books you recommend for the mindset of a business owner? Just 2. The first one is by Dale Carnegie, called How to Win Friends and Influence People. And the second one is also by Dale Carnegie, called How to Stop Worrying and Start Living. Now, these 2 books are crucial to read for all entrepreneurs or anybody, even if you work at a big company, because it'll teach you about confidence, and it'll teach you how to sell, and it'll teach you how to talk to people. Your network is your net worth, and relationships are more important than product knowledge. Now, his book called How to Stop Worrying and Start Living, he talks about how to live in what's called day-tight compartments. And what that means is you don't worry about the past because you can't change it. Don't worry too much about the future because you might not have as much control over it. Just live today. Live for today in a day-tight compartment and enjoy your life. So those are the 2 books I recommend everybody to read. Okay. And my son Andrew, actually, he just finished How to Win Friends and Influence People, and he loves it. Okay, next up, Andre wrote, do you think the 48 Laws of Power, Machiavelli, and The Art of War are good business books for business owners. Yeah. So let me go through those really quickly. So the 48 Laws of Power was published in the late 1990s. And basically it teaches you how to understand how people collect and amass power and influence in life. Next up, Machiavelli. So he was an Italian philosopher from the 1400s, or maybe early 1500s too. And he wrote this great book called The Prince. And his most famous quote is, "The ends justify the means." Now, I have a problem with that quote because it can imply that you can be unethical. The ends justify the means. As long as you're ethical in business and in life, I think everything is cool. Now, there are no shortcuts. As Warren Buffett said, it takes 30 years to develop a reputation and 30 seconds to ruin it. I would even say half a second by using social media the wrong way. So just remember, we might have many jobs in our lives, but the only thing we take with us from one job or career to the next is our reputation. Then he wrote here, The Art of War. Yeah, The Art of War, and actually I have a poster about that. There's a famous quote from it, which is, "Every battle is won before it's been fought." That's from Sun Tzu and The Art of War. Now, instead of reading these books, especially Machiavelli and The Prince, it's a little bit difficult to read, for me at least. What I recommend you do is just search for famous quotes from those three aforementioned books. All right. Next up, Andre wrote, should business owners be ruthless in their particular industries? Yeah. As long as ruthless means you're not doing anything unethical. As I just mentioned, all you have in this life is your reputation. There's nothing wrong with being hyper competitive. I certainly am for my students. I want the best for my students always, as long as you're very ethical. Yeah. Okay. All right. Next up, Prashant from India wrote, "How are you? I'm always great. Thanks. I hope you're doing well." Okay. And the question is, how do you keep your business under your control when you've introduced many investors and you have only a 35% stake left? Yeah. There's different voting shares. There's Class A and Class B. And I'll give you an example. So Mark Zuckerberg from Meta owns about 13 to 14% of Meta, but he has 53% of the voting rights because he owns over 80% of the Class B shares. So you can structure your investment offering memorandum when you launch your company and when you're raising money. You can structure it in such a way that you don't lose control of the company, even though you're selling parts of the company. So for example, let's say that your 35% is what you own still in the company. Well, you can set it up so that every percent you own is worth 2% in voting shares, meaning you own 70% of the voting shares in the company. And that way you don't give up control. Now, it's very hard to do this, very hard. And the reason that Mark Zuckerberg got away with this was because in 2008, when we were within 24 hours of bank machines not working, he was able to raise capital from venture capital firms because he was the lowest risk investment out there, Facebook at the time. And so timing has a big impact on your success in business. If you go back to 2001, 9/11, it was awful and hardly anybody wanted to invest in companies. So in 2001, the company that got the bulk, or a lot at least, of the investments from the venture capital community was Google. And as a result, they were also, Larry and Sergey, allowed to keep a large percent of voting shares. Okay. Next up, Prashant wrote, can we have multiple lead investors, repercussions of it, if any? Yeah. The way it usually works for private companies is one venture capital firm will lead a round, the A, B, C, D round, for example. A company like Sequoia, Andreessen Horowitz, Kleiner Perkins, etc. Then when you go public and you do an IPO, and this is the IPO for Facebook, you can have joint leaders. Okay, now in this case, Morgan Stanley led the IPO, and this is called an S1 document. And before you invest in any IPO, I want you to always please read the S1, which you can get from sec.gov. Now, sometimes what happens is you have two companies that will lead the IPO, top left and top right. So in this case, although Morgan Stanley led the IPO, sometimes you have Morgan and Goldman leading the IPO. And you always know who's leading it by looking right here, top left. But sometimes there's co-runners of a book, so to speak. So the bottom line is, with private investments, meaning venture capital, it's usually one company that leads the round. But when an IPO occurs, quite often there are joint book runners. Okay. All right, next up, Caroline from France, who lives in Canada now, wrote, "Good morning, Chris. I'll see you at the Silver Hour." Awesome. I'll see you at 10 a.m. my time, for our weekly Zoom. Thank you. Good to see you. Next up, Michael wrote, "Good morning. I just finished an hour of your Excel course, taking baby steps." Thank you. Thank you. And I hope you enjoyed it. I really poured my heart into that one. And I teach you programming in my complete Excel course as well, using a ton of props. Okay, so object-oriented stuff. And what's coming out soon, later this year, is a course I'm creating with Luca Anderson called the Complete Python course, which will be added as a free elective for all of my MBA students. So if you signed up for my MBA program on my website, harounmba.com, if you've already signed up or you will sign up, you get all of my electives for free, including the Python one. And I'm having so much fun putting this Python course together. Okay, next up, Raheel wrote, "Hey, Chris, how are you doing? I'm always good, thanks. I hope you're doing well. First time I've seen you on the call. I hope you join us again." She wrote, "My question to you is, how does option trading work in hedge funds? Is it day trading of options with charts and price action, or holding options for longer periods based on fundamentals and technicals?" That's a great question, yeah. So most hedge funds, the more successful hedge funds, they think longer term. And I know it's a weird thing to say because we all think about hedge funds as short-term oriented traders. The most successful ones are not. And I caution you all, and I'm going to get down on my knees because I care. Hey there. Please don't day trade because you will not make money in the long run. How do I know? Well, I say with love in my heart because there are no successful day traders because you can't find them. Do a search online. You can't do it. And the reason you can't do it, and I'll get to options in a second, the reason you can't do it is because you get fooled by randomness. Every month has 20 days that the market's open, meaning 20 weekdays. And stocks go up and down for stuff out of your control. For example, AMD was up a lot pre-market because NVIDIA released great earnings last night. The market might go down because of saber rattling between Beijing and DC, for example. You can't control that. You got to be longer-term focused. Let's pivot and talk about options now. So options are like insurance contracts. And a lot of hedge funds, what they'll do is if they own a big position in a stock and they're worried that that stock might go down and they can't sell it, for example, because they own too much of it and it would drag it down, they might buy an insurance contract called a put. And a put basically is a small amount you pay to get protection on that stock you own. So if that stock were to fall, you'll lose money on the long side of it, being the shares you own, but you'll make money on the put side of it. And the most money you can lose with a put is the amount you purchased it for, okay, when you buy a put. Now, a call is the opposite of that. A call means you bet a small, relatively smaller amount, and then if the stock goes up a lot, you make a lot of money within a certain amount of time. I have a course called the Complete Options course, which is also a free elective for my MBA students, where I teach you 35 different option strategies. Please do not trade options. I want you to practice first for 6 months, as I mentioned in that course. And then if you're going to invest in options, just buy calls or buy puts, that's it. Because when you underwrite them, right? When you underwrite them, meaning when you sell them and issue them for other people, you can lose a heck of a lot more money than you can than when you just buy them. And the reason is when you underwrite a call or a put, you can get randomly assigned. And what that means is even though you sold that position to somebody else that might have bought a similar position from somebody else can actually make you buy back that position. That's called being called. Yeah, it's complicated. If you have more questions, let me know. Okay. Now, if you're going to invest in calls, I recommend buying leaps. And leaps are long-term calls, meaning they don't expire in a month or 2 months or 3 months. They expire in 1, 2, or 3 years. The longer the view, the wiser the intention, always. Okay. Next up, Kevin wrote, "Good morning from Lakeland, Florida." Good morning to you, too. Great to see you. And then Prashant wrote, "I will be joining the Zoom call from next week onwards at 10 a.m. My weekly Zoom call for my silver students. And for anybody in my, you can ask me questions anywhere, but for anyone taking my silver MBA program, you can always go to the first lecture to get the link to the weekly Zoom call I do. That's every Thursday from 10 a.m. to 11 a.m. Pacific time. Thanks. Gary, how are you? And Gary is a former investment banker and a wonderful human being as well. He also used to teach in China, and he's mentored a lot of my students as well. Gary, you're one of my favorite people in the world. God bless you. Always good to see you. So Gary wrote, good morning, Chris. Good morning. What is your opportunity? What is your opportunity of the addition of the 6 countries to BRICS and the possible short-term investment opportunities? Yeah. So for those of you that didn't hear, what just got announced is 6 new countries have been added to BRICS. Okay, and BRICS is a consortium of countries that kind of stick together: Brazil, Russia, India, China, South Africa. So the new ones that have been added include Egypt, where my dad's from, Ethiopia, the UAE, I think Iran, I could be wrong on that, as well as Argentina and one other. So what's happening is, China and the US are obviously competing with each other. And what China wants to do longer term, I think, is to make sure that the US dollar is not the only reserve currency in the world. Now, the US government is the last country in the world that would go bankrupt. It's all relative. And we'll know that there's a crisis of confidence when it comes to US dollar if investment bankers and investors start discounting cash flow using another currency aside from the US dollar. And so the biggest risk to national security for the US government, or for any government that is if people stop using their currency. And I'll explain why with this. It's a fun problem. So what countries can do is they can control their interest rates. Okay, so by buying and selling bonds. So if I'm the US government and you're a consumer, if I sell a bond to you, okay, what happens is you give me your money. And I take a lot of that money out of circulation. And because there's less money, whenever there's less anything out there, less supply, the price goes up, meaning interest goes up. And vice versa, if I'm the US government and I buy that bond back from you, what happens is there's more money out there in society. This is fake money here, fake money. And if there's more money out there, that means the price of money, meaning interest rates, goes down. And so that's why a lot of countries are making cryptocurrencies illegal, meaning left-wing countries, because it means a lack of control for command-based economies. So what is the impact going to be? Short term, nothing really. In the long run, yeah, the US dollar could lose some share. Now, I don't think that the Chinese yuan or renminbi will become the reserve world currency ever, because it's a command economy. There's too much at stake. Yeah. And I think India, actually, if any country is going to be the reserve currency in the long run, it's probably going to be India, which is the world's biggest country now by population, bigger than China. Yeah, I'm not worried about the BRICS impact in the short run. All right. Let's see. Next up, I've got here. Okay, Ders wrote, hi, Chris. Hope you're well. Likewise. Good to see you. Niraj wrote, hi, Chris. Hope you're doing well. Likewise. In venture capital, are there specific quarters where VC firms tend to invest more of their cash balance into various companies? I don't think so. I don't think it matters as much because they're so long-term focused. But when it comes to mutual fund companies, meaning companies that buy stocks, sometimes they'll deploy a little bit more capital in the first quarter because of mutual fund inflows. And I know from working for hedge funds for years that quite often companies will deploy more capital in the fourth quarter, and they'll use leverage to do so because a lot of hedge funds and mutual fund portfolio managers are chasing performance. Yeah. All right. Great question. I've never seen that one before. Okay. Next up, Durs wrote, nowadays, Blackrock and Vanguard are in hot plates in the YouTube podcast. Someone says they control the United States. What's your opinion? No, I don't believe in that. I don't believe in conspiracies. There's too many journalists and lawyers out there to stop conspiracies like this. Now, Vanguard and BlackRock, they issue a lot of ETFs, right? So ETFs are having a lot more power now when it comes to moving markets. So I don't think that they control the United States at all. Andre, thank you for that donation. And thank you for writing congratulations about this being the 5th year anniversary of my weekly podcast. And that donation, God bless you, that will go directly to Project Magoo. And that's where we build schools in Rwanda. Thank you. God bless you. And that's why I do what I do. I do what I do to build schools and to offer scholarships. I want to die broke, having given all my money away. Okay. All right. Next up, Durs wrote, how do these asset management companies take place, their massive growth? Yeah. Well, they're just market leaders because they do it in scale to the extent that the fees are low. So if you were to invest in a Vanguard ETF called VOO, VOO, which I own and I love. Now the VOO, it represents the S&P 500. The fees are only a couple of pennies per $100 you invest each year. And by scaling a business, whether you're Coca-Cola, Vanguard, or whatever, you can charge lower fees, but you got to scale it big time. All right. Hey, Manas, how are you, man? Manas wrote, good morning, my dear mentor. Chris, please. Hope all is well. What a wonderful legacy you're building on YouTube. Glad to have you by side.
Someone is at the front door.
Sorry. Let me just unplug this. We just got a new security system. Okay. You wrote, what a wonderful legacy you're building on YouTube. Thank you. Glad to have you side by side for everything. I've been here for a long time, probably 40 months. Thank you for that. I appreciate it. And sorry about that disruption there. Okay, next up we have Renvir, who's from Mauritius and my Silver MBA. Great to see you. You wrote, hope you're doing well. Likewise. And then you wrote, can you show us how to know if an option is liquid? Absolutely. So whenever you invest in any security, you want to make sure that you can get in and out quickly. And the way to know is if you look at any stock, you look at the average daily volume times the share price, and you make sure that you can get in and out in less than an hour. Now, let me show you an example of this, and then I'll show you an option as well. So I will use Tesla as an example here. Okay. Let me type in ticker Tesla, TSLA. So Tesla, we know, is very, very liquid. And the way you know it's liquid is, again, you take the price right here times the average volume, which is right here. So you can get in and out pretty quickly. Give me 1 second. I'm just going to do a quick check here, guys. I had a little issue here with the screen share. Sorry about that. So here's Tesla. Sorry. So right here is the price of Tesla. Okay, it's $230 times the average volume, which is very high. You want to make sure that you can get in or out of a stock, if need be, in less than an hour. Okay, now when it comes to options, you click here. And the way you know if a company has options is if you click here in Yahoo Finance and you see information behind it, right? So right here we see information. If it's blank here, the company does not have options. Now, what you do is you can look here at the volume. Okay, so this is the volume right here for the options. Now, when you transact in options, they're always sold in lots of 100. Okay, so this isn't just one you're buying here, it's a lot of 100. And you multiply that times the volume. Okay, now most options are very illiquid. You got to be careful. This one here is incredibly liquid. Make sure you never buy options that are illiquid. Okay, otherwise you might move the option or the underlying stock. That is, if you buy any stock or option that's not liquid. Okay. All right. Okay. And thank you for that comment, Manas. God bless you. Manas then wrote here, AI is raising a lot of money for new startups. I believe most of the folks are going to be going out of business because probably it's a lot of pump and dump. What are your thoughts? Yeah, no, absolutely. It's so interesting in venture capital. I see this a lot now, where companies that were not really AI companies are branding themselves as AI. It's the flavor du jour, or the flavor of the month, so to speak. So yeah, but it's human nature. Whenever there's a new secular growth market, all ships rise initially, and then there's a day of reckoning, right? So It's what happened with the internet bubble 1.0 in the late 90s. And it happened also with NFTs and cryptocurrencies. And it happened hundreds of years ago. I think it was in the 1600s in Holland with tulip bulbs. The price of tulip bulbs went up thousands of times. It was a massive bubble. So yeah, that's what's happening right now with AI. Yeah, but I think AI is real. I put my reputation behind it. I just released a course with Luca Anderson called the Complete Artificial Intelligence Course, which is an elective in my MBA program as well. I think AI matters a lot. And I think AI is the most important investment paradigm shift we've seen since the mid-90s when the internet really became commercially viable. Okay. Okay, next up, the question is, when was the last time someone said Metaverse or NFT? Yeah, and Metaverse, I think it's spelled M-E-H, Metaverse, yeah. The problem with the Metaverse and with Oculus and other VR or AR companies is 40% of people that use these products complain about motion sickness. In fact, Meta had a $20 billion contract with the United States Department of Defense. And they were using it for warfare training. And 80% of people at the DoD that use the Meta goggles or VR product for warfare training reported motion sickness. Yeah. I think if anybody's going to nail this industry, it's going to be Apple with the release of their AR product coming early next year. The pricing point is ridiculous at over $3,000, but I think Apple will nail it. Okay. All right, but in terms of NFTs, I'm a believer in some NFTs. And with any investment class, you always have to look closely at the volume, at the supply, right? And so my grandfather, God bless him, I miss him, used to say, Chrissy, buy land, they're not making it anymore. So you want to look at the supply of NFTs you're investing in. And I think there's a lot of great NFTs to invest in when it comes to the sports market, like baseball cards or basketball cards. Always look at supply. Yeah. All right. Next up, Renveer wrote, if you had to choose a game that will make someone a better money manager, what game would it be? Yeah. Without a doubt, SimCity. And I play SimCity Build It on my iPhone every day. And back in the 80s, I played SimCity in black and white on my Mac. And playing SimCity, I learned about supply and demand, and I learned about bond trading as well. The older SimCity games allowed you to issue bonds, not the mobile version though. And my son Andrew actually, I'll show you here, a picture of him. So this year is Andrew. We love blue. Andrew is at Berkeley now. And the reason that he got into Berkeley to study engineering, or wanted to at least, was because we were on vacation years ago and I showed him SimCity. And I recommend that you get your kids to play SimCity as well. It helps you understand budgeting, as well as supply and demand, investing, etc., and saving. Okay. Next, but the game I'm playing right now is I'm playing Red Dead Redemption 1 for the third time. I love that game. Yeah. As many of you know, it just came out again on the PS5. Yeah. Okay. Okay. Next up, Manas wrote, China is falling hard. Even stocks are getting dumped. Will China pull the U.S. and the world into recession, even when it's technically in a recession for the rest of the year? I'm amazed the U.S. economy is doing as well as it is right now with Chinese economic growth issues. I don't think that China will pull the world into recession. I don't think that's going to happen, only because the U.S. economy has been incredibly resilient despite China's economic issues. Yeah. Okay. Next up, Durs wrote, what are the best biographies to read? My favorite one was Walter Isaacson's book on Steve Jobs. I love that one. And by the way, quick side note, very successful people, they got there because they love to help other people. And very successful people eventually publish their secrets in biographies. So I want you to be a voracious reader of biographies. And I love to listen to them on audible.com. And my favorite ones are probably the ones that are read by the author like Sir Richard Branson. Yeah. And if you haven't found your passion in life yet from a business perspective, listen to biographies of successful people. Okay. Next up, hey, Julia. First time I've seen you here. I hope you join us again. Julia wrote, "Good morning, Chris from Italy. How are you?" You wrote, "I bought your business plan Excel course and loved it. Thank you so much. Appreciate it. If I plan to buy a property to conduct my business, do I need to create a dedicated space in Excel?" Yeah. So I recommend if you're going to buy a property that you do a long-term cash flow analysis, right? And the way you can do it is it's tough to do it in my business plan course, but the way you can do it is you calculate how much cash you're going to make each year from that property in the long run, using Excel if you want. And then you use the NPV formula, net present value. So you type equals NPV, open brackets, you type in the interest rate, and you select all the cash flows, and you make sure it's a very big number. Yeah. And if you have more questions on that, please let me know. And thank you for your support. I appreciate it. Okay. Next question is, how did you complete your research on Ripple? Like, how did you start? And when do you know it's a good token for long term? What are the parameters you look carefully at, the founders, etc.? Yeah. So I have a course called the Complete Cryptocurrency course, where I created a 49-step framework that you can all use to analyze cryptocurrencies. And I modeled it, actually, my investment framework off of an IPO filing, an S1. The problem with investing in cryptocurrencies is they're not regulated by governments. You know, the good ones are regulated by the laws of mathematics. And because there's no regulation, disclosure sucks. And I think most cryptos are an absolute scam. And I've publicly said before many times, and I still believe, that you should not put more than 0.5% of your liquid net worth in any one crypto. And I don't want you to have more than 5% of your liquid net worth in cryptocurrencies at all. But the way that I do the analysis is I created 49 steps based on an SEC S1 prospectus. It's not as good as this, though, because this here was written by a ton of lawyers and investment wankers. Sorry. And there's much more government regulation as well. I think regulation is needed for cryptos. Okay. All right. Next up, I have got here, Julia wrote, how do I make sure to apply depreciation? Thank you very much. Yeah. Okay. I got you. I see what you're saying. Yeah. So when it comes to real estate, with your earlier question. Yeah. So I would not look at that. I'm talking to an expert, a real estate expert, of which I'm not. I tend to look at things that are more simplistic, like cash in, cash out. Depreciation is a non-cash expense. And whenever I model companies and try to come up with target prices, I look at what are called a pro forma or non-GAAP earnings. And the reason I look at that, and when companies release earnings, they release two sets of financial statements, usually. GAAP and non-GAAP. GAAP is the accounting stuff that includes non-cash stuff like depreciation. And non-GAAP is pro forma, which does not include non-cash items. So I look at pro forma earnings always. And the reason I do that is so I can arrive at how much cash a company can make or a real estate holding longer term. Yeah. I don't look at depreciation. Okay, next up, hey, Larissa, how are you? Wrote, hi, Chris, good afternoon. A lot of new people today. Great to see you. I hope you join us again. You wrote, good afternoon from Sao Paulo, Brazil. I love Sao Paulo. I had the best mortadella sandwich of my life there when I gave a keynote for a Udemy VC event. You wrote, this message is just to let you know I've been learning with you. Thank you. And thank you, and God bless you. Thank you. Next up, Renvir wrote, hey, Chris, how do you forecast the cost of cloud processing when making your business plan? Well, it's like any other expense, except you want to decrease that expense over time because companies like Amazon have cut the pricing point of Amazon Web Services by well over 100 times since AWS was introduced in 2005. So here's what I would do. Whatever you see as a cost per year over the past 5 years, if it declines 10% per year, then you model a decrease of 10% per year. Okay. and competition is a good thing for the consumer. Next up, Manas wrote, Bitcoin actually goes against your policy of investing in a company if the founder is out there, like, who is Satoshi, dead or alive? No one knows, but still it's a valuable asset. Any suggestions? Yeah. And so what Manas is referring to is years ago when I worked in the venture capital industry, I wrote an article at venturebeat.com, which you can search for. And the title of the article, I think, was something along the lines of, when founders leave a company, investors should run for the exit. And I believe that in most cases. Now, when it comes to Bitcoin, I still think, relatively speaking, it's the best investment in the cryptocurrency industry, partially because there's a dearth or a limit on supply. There will never be more than 21 million Bitcoins by the year 2140. Yeah. But touche, good point. Good point about the founder. And I usually don't invest in publicly traded companies if the founders all leave and are no longer, advising the company at all. Because bureaucracy sets in, always. And I can go into more detail on that if you guys want me to. Okay. All right, next up, Renveer wrote, hey, Chris, hey, man. What would you do if you had invested in options and by the time you wanted to close, if the liquidity went away, what would you do? Would you exercise it? Well, if it's in the money, it's going to get exercised automatically if you don't get somebody to buy it when you issue a market or limit order. And if it's out of the money, it's not worth anything anyway. Okay. Next up, 2020 wrote, hey, Chris, how much do these high interest rates affect selling calls? There is an impact on it. And in my complete options course, which is a free elective for my MBA students, there's 6 parameters you can enter in. One of them is the interest rate. And you'll see the impact when you change interest rate. Yeah. And I think that's using the Greek variable rho, RHO. That's how you can calculate the impact of changes in interest rates. Okay, next up, Niraj wrote, I was working at a hedge fund, more time intensive. Is working at a hedge fund more time intensive than working at a venture capital firm? It all depends. 4 times a year it is, because every 3 months, companies report earnings. And when it's earnings season, you work long hours at a hedge fund. Venture capital is more long-term focused. I think the hours are probably lower in general in VC. Yeah. Okay. Next up, DF wrote, Chris, I appreciate each of your weekly Q&A podcasts. Thank you. And you sharing so much with each of us. Thank you. And thank you for being here as well. Yeah. And I don't have a job. I have a passion. And the way you know you have a passion in life is if I tell you you can't travel and you can't work and you can't go to school for 30 days, what do you do with your time? This is what I would do. I love every second of trying to humbly help people. Yeah, it's my raison d'être. And if you think of your career as helping people, then it's easier to get out of bed every morning. What are we here for anyway? We're here to serve others. Okay, moving on to Conrad. Hey, Conrad. Conrad wrote, I'm sure many have asked you, but who are your mentors, role models in the finance field? Yeah. So for me, my biggest mentor is Carson Levitt. And Carson hired me to work at Citadel and at Pequot as well. And Carson Levitt, great guy, actually. He's why I'm here on the West Coast. He actually used to work for George Soros. And I asked Carson, what was it like working for Soros? And he told me that he joined Soros in the summer of 1999 when Soros was down 15% for the year. And then he got the company back to break even by December 1st, 1999. And then he made 40% in one stock in the month of December 1999. And that was Qualcomm. And he keeps things really simplistic. So when I asked him, why did you invest in Qualcomm? He said, well, I was walking down Fifth Avenue and I saw more and more people holding these things. So I asked myself, what's in them? Yeah. He keeps it really simplistic as well. He's a great guy, Carson Levitt. Yeah. And by the way, when I interviewed with him, and I always talk about the importance of bonding before business. But when I interviewed with Carson Levitt for the job at Citadel, they flew me into their headquarters in Chicago to interview with him years ago. But when I interviewed with him, he was asking me tons of questions, and he looked at the bottom of my resume, and he saw baseball as one of my interests. And he goes, "Oh wow, I didn't know you like baseball." And he sat back, and we talked about baseball for like an hour. So remember, you always want to bond before business, and always list your interests at the bottom of your resume as well. Now, if you're not sure how to bond with somebody before a meeting, you can always go to their Twitter profile and see who they follow. If they follow a sports team, you know what to talk about. Yeah. And when I was in that interview with Carson Levitt, I remember he was asking me a lot of questions about cloud computing stocks. And I pulled out a lot of one-pagers that I'd written up on cloud computing stocks. So he asked me about Salesforce.com. And he grew up with Mark Benioff. They're very good friends. And so I pulled out a one-pager on Salesforce. And I have many other one-pagers as well. And on that one-pager, I had fundamentals, evaluation, and technical analysis. You got to bring these things to your interviews. And in my MBA program in the first semester, I provide you with 12 templates you can bring to ace any interview. And he said that. He said, and I feel uncomfortable saying this. I'm a humble guy, but he said, this is the best interview I've ever seen. Well, every battle is won before it's been fought, as Sun Tzu wrote. Yeah. All right, let me get to your next question. Sorry for rambling there. Okay. Next up, Michelle wrote, "Hello, Chris. Absolutely love the graduation. Thank you for such a wonderful time and my diploma. You're most welcome. It's so good to see you as well. We had our, God bless you, and we had our annual networking and graduation event for my gold and platinum students from my MBA program on August 12th and 13th here in the Bay Area. It was incredible. I love my students. They inspire me so much. Yeah. And next year, I promise you, I'll get better air conditioning in the conference hall. Thank you. And thank you for all the emojis, too. Okay. Next up, Manos wrote, "People say Ripple is going to be the future of money and banking payments. People speculate it's a hunter bagger. But why is it so important for us, and what's the proof?" Yeah, it's tough to come up with proof because this is not a regulated security. Now, I'm absolutely shocked that Ripple won the case in the Southern District of New York. Now, the government was suing them because they raised a lot of money without filing first. But Ripple won that lawsuit, and I'm shocked. I don't think they should have won that lawsuit. I think that all cryptocurrencies should register with the SEC first. Always, yeah. Now, the founder of Ripple lives not too far away from me. Very, very smart guy. And it's supposed to be the de facto crypto for the financial services sector. And I publicly disclosed the 4 cryptocurrencies I own, and I haven't sold, and I'll probably never sell. And those are Bitcoin, Litecoin, Ripple, and Ethereum. Yeah. Now, always do your own research. I'm not telling you to buy those. Thanks. Okay. Let's give me 1 second, guys. Okay. Carol, who goes by Laraxac, who's in my MBA program that started recently, wrote, "Hello there, guys. Chris, great to see you." Thank you. Good to see you too, Carol. You wrote, "Congratulations on your 5-year anniversary of the weekly webcast." Thank you. Appreciate that. Thank you. Next up, Manos wrote, "It's speculated Binance is selling Bitcoin to keep its token, BNB token, afloat. I don't trust their token because it's hyped up too much like Coinbase stock. Do you like BNB's token and why?" I've not done enough research on it, so I can't really comment. Yeah. Okay. And I'm not that active in cryptocurrencies. The only time I buy is when everybody else is selling and it feels like the end of cryptos. You got to be a contrarian if you want to make money, always. Yeah. And then next up, Carol wrote, "Chris, out of curiosity, do you use any special mnemonics to remember names? I've been watching the NBA, and you're just juggling names like crazy. It's so impressive." Thanks, Carol. I appreciate it. I don't, but when you do what you love doing, you don't have to memorize things. It just comes naturally. It's kind of like when you're playing a video game or watching a great movie. Like, you remember that entire movie years later because you enjoyed it. And I enjoy what I'm doing as well. And thank you for that. And God bless you. That's a new word for me. Mnemotechnics. Very cool. Thank you. Okay, next up, Renveer from Mauritius wrote, Are we actually having a soft landing? It looks like we are at this point. Now, a soft landing means that the economy doesn't crash. It just slows down a bit, and then things pick up again. So it looks like we are, in fact, having a soft landing in the United States, at least. Now, the fascinating thing about the United States is the fact that the economy, the GDP, is growing, 2.4%. And a lot of people thought we might be in a recession by now. Now, people have to pay very close attention to the U.S. consumer and U.S. consumer spending, because 2/3 of the United States economy is consumer spending. It's not big business. That's why the whole world watches the U.S. consumer closely. And one of the reasons why I humbly think that U.S. consumption is doing incredibly well this year is because the markets had the best start to the year since the 80s. At least the NASDAQ had its best start since 1983. And it creates what's called the wealth effect. So if everybody's portfolio goes up a lot, everybody feels richer and people spend more, it becomes self-fulfilling. Yeah. Okay. Next up, Manos wrote, what are your thoughts on Bidenomics? Is it good or bad? How has Biden handled the economy? And what role has Powell played in this? I think the Federal Reserve, I'm not going to comment on Biden because I try to be apolitical, but I'll talk about Powell. I think the government's done a good job of raising interest rates slowly and signaling to the marketplace that, we will raise rates again, much more aggressively if inflation increases. And the government's done a good job, Powell at least, of controlling inflation. Inflation is down from high single digits last year to low single digits. So they've done a great job. And you have to raise rates, because if you don't raise rates, then when things suck and the economy sucks, you can't cut rates to stimulate the economy. I'm out of money in my gun here. Yeah. And I fault the Democrats and the Republicans over the past 10 to 15 years for not raising rates when things were good. If they raised rates when things were good, in hindsight's 2020, then they wouldn't have to go to a zero interest rate policy during COVID. Yeah. You got to be long-term focused always. Unfortunately, our politicians are not usually. Okay. Next up, Manos wrote, I'm reading One Up on Wall Street. It's dope on a rope. It's 40 years old, but Lynch is a freaking genius in market. He always says, never buy something you don't understand and look for ideas. Yeah. Look for ideas everywhere and in everything you wrote. Yeah. And so Peter Lynch, he was a portfolio manager at the Fidelity Magellan Fund, which is the most popular mutual fund in history, back in the 90s. And my mentor, Carson Levin, actually, when he went to Wharton, he interned there as well. He worked for Peter Lynch. And the brilliance of Peter Lynch is, again, he invests in what he understands. And a great example of this, as mentioned in that book, is his wife was telling him about these incredible pantyhose products that come in eggs. Remember, they used to put in plastic eggs? I'm dating myself here. And she loved them. And because she tried them and told him about it, he invested in the company. And I remember those egg things because my mom used to use those, and I used to use those eggs to store my Smurfs. And I look like a Smurf today. Schtroumpf. That's what you say in Europe, right? The Schtroumpf. Yeah. Only invest in what you understand, always. Yeah. Okay. Next question is from Review Ada, who wrote, is your course valuable for Indian graduate students? I humbly think so. And all my courses in my MBA program, they have a 30-day 100% money-back guarantee. And if you sign up for my MBA program at harounmba.com, if you don't think you're getting at least a 10x return on your investment in the first 30 days, please ask for a refund. Yeah. And I pride myself on teaching based on my practical experience and never based on theory. Okay, next up, Ralph wrote, hey, Chris, how can you build a team without a product? What should you do if you just want them as employees and not a founding team? Yeah, it's tough to do that without raising capital first, right? So you don't have to have a physical product to launch a company. You can have what's called an MVP, meaning a minimum viable product or a concept. And it might be wireframe drawings, that for an app, for example, or a website that you show investors. Now, the only way to build a team, if you're not going to give them equity, is to raise money, and always use other people's money, OPM. And again, you don't have to have a real product in order to launch a company. And I'll give you a great example of that. I met with this venture capitalist named Randy Komisar at Kleiner Perkins years ago. And we were working together, meaning Kleiner and the venture capital firm I worked at. We were working together on a startup. We invested in the same company. And I got to talk to Randy. And Randy was the guy that invested in Nest, which is a thermostat company, air conditioning thermostat company, that Google bought for more than $3 billion. And I asked Randy, I said, amazing that you did this well on this deal. What was the product like, Randy, when they came to meet with you? And he said, Chris, they didn't have a product. They came in with a block of wood. It was a round piece of wood. And they said, this is what the product's going to look like. And I said to him, well, how did you know to invest if they didn't have a product yet? If it was just kind of a minimum viable product, just a piece of wood? And he said, because he was incredibly impressed with the management team. You always want to invest in a great management team first and the business model second. And I would always rather invest in an A management team with a B business model instead of investing in a B management team with an A business model. The jockey's always more important than the horse. Excuse me. Okay, next up, the question is, if Binance goes bust, God forbid, or Coinbase goes under a bust, what is the future of crypto? Because no one except SBF knew about FTX, but it happened suddenly. Will other cryptos survive? Yeah. So what I would say is this. Don't ever leave your money on any crypto exchange or in any hot wallet. You want to put your cryptos in a cold storage wallet. And the easiest way to remember this is a hot wallet requires electricity. So if you leave your cryptos on Coinbase or somewhere in the cloud, it requires electricity to turn it on. There's a chance you could lose all that money. The only way to invest in cryptos longer term is to use a cold storage wallet, which is like a USB token. Now, there are great ones from companies like Trezor. And the way it works is you plug the USB into your computer, you put all the cryptos onto that cold storage wallet, and then you unplug it. It doesn't require power to secure your cryptos. Always use a cold storage wallet. Yeah. And another way to think about it is, you have a checkings account and a savings account. Well, your checkings account, you put less money into it because the interest rate's a little bit low in your savings account. But the checkings account is used for money you want to spend or write checks for. But you keep most of your money in your savings account. That's a cold storage wallet, your savings account. Your checking account is your hot storage wallet if you want to transact with cryptos online. All right. And then Manas wrote, thank you for everything, my mentor. God bless you all forever and ever. See you forever and ever. And thank you for those wonderful emojis. God bless you more. Thank you. Thank you. All right. And then Renvir, your question about options. Tell you what, during our silver webcast today over Zoom, let's go through that in more detail. Yeah, at 10 a.m. Thank you. Okay. Next up, Niraj wrote, I actively trade and invest in crypto and equities, but I do this under my dad's account as I'm 15 years old. Can I open an account under my name as a minor? Or do I open an account through the setting up an LLC with my dad? Yeah, I think so. So my kids transact as well. They have their own accounts, but we had to set them up for them. I don't know the answer to that. What I would do is I would call the bank or your brokerage firm and just ask them, what are the rules? Yeah. Yeah. And I say this with love in my heart, be long-term focused, please. Yeah. And when I used to manage money professionally, yeah, I would trade every now and then. But my performance every year came down to my due diligence in 3 or 4 stocks, usually a handful of stocks. And those are the ones that I was very long-term focused on. Because if you don't do a lot of investment research on a company and it starts going down, you might panic. And Warren Buffett once said that the New York Stock Exchange is the only store in the world where consumers sell things when they go on sale. Okay, next up, Osin wrote, hey, Chris, hey. I bought your course and I'm completely loving it. Thank you for making it. Thank you, and God bless you. I appreciate that. And then you wrote, and please keep typing your questions if you guys have them. Thank you. Okay, next up, Oisin wrote, I'm a 22-year-old cybersecurity graduate on approximately $60,000. And I was wondering, do you feel it makes more sense for me to aim to buy property for me to rent out? Yeah, the sooner you can buy property, the better, like your own house. Now, I had to wait until my 30s till I could buy my first apartment in New York. But the sooner you buy, the better. And instead of spending $600 to $1,000 per month on rent, if you bought your own place, then your net worth would be $30 million higher in 50 years. You could run through the math. Yeah. Okay. And then Trader wrote, I started learning crypto from Udemy by Chris Haroun. Thank you. Moving on to Ralph, who wrote, what if it is a physical product? Do you have to have a prototype, or can you raise money with a CAD only, meaning computer design? Yeah. You don't need to have a physical product first. You can easily raise money with just a business plan. Now, failing to plan is planning to fail. And you have to write a business plan first, which is what I teach in my MBA degree program in the 3rd semester. And for those of you signed up for my MBA program, just go to E31 through E34. That's Entrepreneurship Semester 3, Class 1, through Entrepreneurship Semester 3, Class 4. Yeah. And as I mentioned earlier with the example with Randy Komisar from Kleiner Perkins when he invested in Nest, the company didn't have a product, right? It was just a kind of a block of wood. Yeah. And you could certainly have a wireframe diagram or a CAD-based diagram as well. Mark, how are you? Mark goes by Satones. He's based in Michigan. He is my brother from another mother. Love you, man. He wrote, hey, brother, shout out to the global MBA gang and Professor Chris. Thank you. Thank you for those emojis. And then you wrote, how do you form a joint venture? With example, the CEO of Exxon. Yeah. Oof. First of all, you got to find a way to get to the CEO of Exxon. So what I would do is exactly this. Your LinkedIn profile is amazing. I would go to your LinkedIn profile, and then I would do an advanced search in LinkedIn to find people that have something in common with you that work at Exxon, not the CEO. And for example, maybe somebody at Exxon went to the same high school or undergrad as you did, or maybe they're in the same organization that you're in Michigan. Then what I would do is I would send an email to this person. Don't send emails because nobody opens emails anymore. Send an email over LinkedIn because we all open every email. And you type this exactly. Subject line, hi. They're going to open it anyway. Contents of the message, for example, John, hope all is well. I also went to the Toronto French School, and I'm also a member of XYZ Club here in Michigan. Please let me know if you have time for a quick call, Zoom call, or a meeting. Thanks a lot. And then sign your future boss. Just kidding. Chris. And you notice there, I didn't say why we wanted to meet. You don't say why you want to meet. And it's not unethical to leave that out. If you say why you want to meet, it's probably a higher probability they won't respond to it because they feel bad they can't help you. Now, once you get that Zoom meeting or the coffee meeting, the first thing you're going to do is, of course, bond before business. Talk about, what you have in common with them. Talk about, is that cafe still open on Main Street at the university you went to, for example? And then after about 10 minutes or so, they're very politely going to say this. And they won't say it like this, but they'll say, why are we meeting? They'll politely say it. And then you mention what you want to do and why you're interested in speaking with somebody from Exxon. And then what you can do is ask them if they can introduce you to someone in the company that can talk about a strategic partnership. And they might do that. They might introduce you to somebody. Now, rinse, lather, repeat. Do this 20 or 30 times with different employees from Exxon. And eventually, you will get to the strategic partnership group. And if they're impressed and they want to help you and you bond before business, then at some point they might introduce you to the CEO. Now, another thing you can do if you want to meet the CEO of Exxon is go to the annual shareholder meeting. And anybody can go to these shareholder meetings. And you always want to go right to the top if you want to get something done, and you got nothing to lose. And after the shareholder meeting is over, and not many people go to these things, but after it's over, you go up to the CEO and you introduce yourself. And the CEO is not going to leave that room until everybody else has left. Why? Because investors and the board of governors maybe and other C-level executives are watching. And she or he wants to set a good example for everybody. So you talk to them and you mention why you want to partner with Exxon. And they're not going to say no right away. They might say, well, I don't know, maybe you want to talk to Sally Smith in our strategic partnerships department. And then you say thank you. And then you send an email to Sally Smith. And if you don't have her email address, and I'm just making this name up, do smith@exxon.com. And if it bounces, do sally.smith@exxon.com, etc. And in that message, you write something like this: hope all is well. I met today with the CEO of your company, or just mention the name, and they recommended I could reach out to you. Please let me know if you have time for a quick Zoom call. Thank you. This works. I know it's gutsy, but you got to go right to the top if you want to get something done. Yeah. And that's actually how I got to lecture at Stanford. Now, as part of Stanford's, they have one venture capital class every year. And I was actually part of the curriculum in mentoring students and guest lecturing and being on panels at the Stanford Graduate School of Business. What I did was this. I called Stanford a bunch of times. And I finally got, I think it was the dean or associate dean on the phone. And I told her, and this is years ago, I said who I am. I'm a professor here in the Bay Area during the evenings. I work in BC during the days. And I'd love to guest lecture. Please let me know what to do. And she said, well, yeah, we'll reach out to all the professors and just tell them that we talked. And so I emailed 30 Graduate School of Business professors at Stanford that day, including Myron Scholes, who created Black-Scholes, which is a way to value options. And every single one of them responded. They responded with, don't ever contact me again. No, I'm just kidding. Okay. Okay, next up, Trader wrote, hey, Chris, I want to work at a hedge fund. Should I prepare for the CFA exam? Yeah, I recommend the CFA over an MBA if you want to learn about finance. And the CFA stands for the Certified Financial Analyst designation. It takes 3 years to do it. You don't have to go to school for it at all. You just write 3 exams over 3 years. And what the CFA Institute does is they recommend a massive number of textbooks for you to read. Don't read those. I want you to do a search for Schweizer. Spell it. I can't spell it right, but Google's smart enough. Do a search for Schweizer CFA books, and then buy them from eBay for like $30. And it's a tiny number of books that you can read to be able to ace the CFA. Yeah. Okay. But the way that you're going to get into a hedge fund is by networking aggressively. And I don't want to overdo this because I had a student complain that I mentioned this too much, but I care. I have a book you can get on my website. Go to harounmba.com called Networking to Get Customers a Job or Anything You Want. It's free. You can download this, and this will help you to network. And what I want you to do is when you network to meet with people that work at hedge funds, I want you to go in with the notion of helping them. You know, the most successful people in the world are givers. They help people. And that's the crux of this book, Give and Take. So I want you to think about it. How can you help these portfolio managers at a hedge fund? Well, you can help them by giving them investment ideas. And in my courses, in my MBA program, I teach you exactly how to do this. And when you meet with them, you provide them with an investment idea on the back of your resume. And then you send them a new idea in PDF format, a one-pager, every couple of weeks or so. And even if they don't respond, keep doing it because eventually they will respond. And your competition will probably give up after sending a couple of those. But if you send 50, that's right, they will respond at some point. Yeah. You gotta be relentless like a pit bull on a pork chop. Okay, Ralph wrote, I'm in the MBA May class. Thank you. Thank you. It's good to see you. And the next gold and platinum I'm going to launch is next year. Between now and year end, people can buy silver to get front of the line access to join the next gold or platinum program. Between now and the end of the year, I'm working very hard on creating new tech courses, like how to program in Python, for example. Okay, next up we have Melody, who goes by How To Vids. Hi, Chris. Hope you and the family are doing well. Great to see you. And the first time I met you was October 31st, 2019. And that was on an 8-hour webcast, which is on my YouTube channel still. And I remember you always have those wonderful colored glasses. Yeah, good to see you. And I hope you're doing well. And I hope your Canon M50 is going well. Now, you're using the Canon M50 for webcasts, which is working out well for you and for online teaching. Now, quite often I get questions from my students on what equipment should I use when doing Zoom calls. And I had a great student last summer in my MBA program named Evelyn from Minnesota. And she said that a great Zoom presence can do the same thing for your career as what a great Italian suit can do for your career as well. So I'm going to provide you all with my recommended equipment. And I want you to use the links I'm providing you with. I don't get comped or paid at all, but I want you to buy it from Amazon in case the equipment doesn't work for you. You can always return it. So go to this website here. All lowercase, hold on a second. HarounMBA.com/equipment. And these are long URLs I'm going to show you on this page. HarounMBA.com/equipment. Okay, so in order to set up a good web presence, you need to have a kick-ass microphone. And what I'm using is a Shure SMB. It's up here, okay? Shure I never get that word right, but anyway. So here's what you need for a microphone. Then for camera, here's what I recommend. So let's get, and then tripod down here, and then lights. Okay, and this will do wonders for your career as well. It's an investment. Let's kick it off with the camera, okay? So the camera I recommend, which is the one that Melody uses, is called the Canon EOS M50. Just to get started. You can always get a better camera longer term. Okay, so that's the camera I recommend. Again, you can go to HarounMBA.com/equipment, all lowercase, to get the details here. Then what you're going to do is you're going to get this lens here, etc. And you can click on everything else as well to learn more about this. And just if you have questions about this, let me know. Okay, let me go back now to the webcast. Okay. All right, next up, Devon wrote, my first financial modeling course from you. Thanks, Chris. Thank you. Since then, I read 53 books and invested myself in markets, and my portfolio is up 25%. Thank you, as you are the key to start my journey, and thank you for that, and God bless you. Yeah, a great job doing your own investment research as well. Next up, Shivansh wrote, hey, Chris, I got an offer from a company that I think is a fraud company. There are 3 employees on LinkedIn, but the website is way too bad. It's bad. How do I check if it's legit or not? I mean, I would go and visit the company if you can, as long as it's not a remote job. I would also look on LinkedIn on the 3 employees to see if you have any other contacts in common with them, meaning are you second degree contact with them, and contact the people that are connected with them and just ask them questions. You can also just do a search on scam and the name of that company online to see if it is a scam or not. Yeah. Okay. Ralph wrote, hey, Chris, another question. Would you advise taking an MBA class every day or no? Yeah, it's up to you. So the way that I set up my MBA degree program is it's your MBA in your terms. So just like you binge watch Breaking Bad, for example, a great show, in a weekend, you can do that. Or you can watch, 1 episode of Breaking Bad per week. Yeah, probably should have mentioned Breaking Bad in my MBA program in the same sentence. Yeah, but it's your MBA in your terms, and you have access to my MBA forever. And you never pay any additional fees once you purchased it. Yeah. And I get a complaint from my students, which is a lot of times you're taking my MBA program and it says you're 30% done, and then you come back to it and it says you're 20% done, and it's frustrating. Well, the reason is because I keep adding more and more content to it, like the complete Excel course and how to program in Excel, complete artificial intelligence course, and soon the complete Python course as well. Yeah. Okay. All right. The last question I see here is from Devon, who wrote, well, it would be great if you can recommend some books for markets, please. Yeah. It's hard because most textbooks or most finance books are very, very theoretical. Earlier in today's call, Manas from India mentioned the Peter Lynch book, Went Up on Wall Street. You can read that because that's based on not theory, but on Peter Lynch's amazing track record of running the Fidelity Magellan Fund. Aside from that, whenever I go into somebody's office that's more successful than me, which means every time I go into somebody's office, what I do is I look at their bookshelf to see what books they have. And then I order those books before the elevator ride is over on the way down. And when I worked at a hedge fund called Citadel, I had a half-hour meeting with Ken Griffin, who's the billionaire founder. And it was an amazing conversation. Smart guy, nice guy. And I looked at his bookshelf, and he had books by Damodaran. And so, of course, I ordered those books. And Damodaran is a professor of finance at NYU. And so if you're going to read any textbooks on finance, just read books by Damodaran. Another one I recommend is called Financial Shenanigans by Howard Shillett, who founded a forensic accounting company. And I was his client when I worked in the venture capital, in the hedge fund industry. So you can buy Financial Shenanigans as well by Howard Shillett. And that will help you understand if a company is cooking the books or look for financial inconsistencies. Yeah. Okay. Give me a second here. Okay. Manas wrote, Jamie Dimon hates Bitcoin. Yeah. And so Jamie Dimon is the CEO of JP Morgan. Great CEO. And it's interesting. For years, he's been saying it's fraudulent. And then his company started offering cryptocurrency services. And he's recently been saying it's fraudulent again. I saw him in one interview, actually, I think it was at Davos, where he mentioned that how do we know that, that there's going to be a limit in terms of the number of Bitcoins created, for example? How do we know? And he's right. How do we know? And that's why I recommend if you're going to invest in Bitcoin, you don't make it more than 0.5% of your liquid net worth. and you need to have government regulation of cryptos, kind of like there is with stocks. And I think the SEC should regulate cryptocurrencies so that people don't get scammed. Yeah. And then you wrote, my mentor, isn't it weird that the market will only go up if rates are down? Is that the only way? No, it's all relative. And it depends how high rates are. And if you go back to the early 1980s when interest rates were about 20%, nobody bought stocks. Why would you? You can put your money in the bank and make close to 20% risk-free. But the market is usually based on future expectations. So even if we're in a bear market or if we're in a recession, the market can still outperform if investors think things will get better in 6 to 12 months. It's all relative. Yeah. Okay, cool. All right, guys. Well, I hope you enjoyed today's call. If you're in my Silver MBA program, I will see you at 10 a.m. for our weekly Zoom call with my Silver students. God bless you, and thank you for being a part of my 5th anniversary webcast. I'll see you next week and every week. God bless you. Click the like and subscribe button and all that good stuff. And thank you. God bless.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better, because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.